Ladies and gentlemen, we are poised to start a much awaited webinar on the European Union's Carbon Border Adjustment Mechanism, or CBAM. Now, the topic for discussion today is the CBAM impact. How will exporters comply and compete? Now, this webinar is being hosted jointly by sentra.world and Bigmint. Bigmint is India's very own trusted platform for price reporting, data, and consulting for commodities. Sentra.world is the number one carbon accounting platform for the steel industry, offering an AI-based digital platform to measure, mitigate, and monetize carbon emissions for companies committed to making industrial manufacturing sustainable for a greener world. Now, CBAM. CBAM is the pivotal topic in steel and related circles because it has moved from the reporting to the implementation stage, as we all know. Now, CBAM represents one of the most significant structural changes to global steel trade in decades. While often described as a climate policy, CBAM is equally a trade cost and competitive instrument, and its implications extend well beyond emissions reporting. It is part of the EU's broader climate goals, which is to reduce GHG emissions by 55% by 2030 against the 1990 levels. Now, CBAM is designed to place a carbon price on imports of carbon-intensive products, including steel, that is equivalent to the cost borne by EU producers under the EU Emissions Trading System, or ETS. Now, during the transition phase, which ran until the end of 2025, exporters were required to report embedded emissions in their shipments to the EU. From 2026 onwards, this reporting obligation translated into a direct financial liability through the purchase of CBAM certificates. Now, for steel exporters, this marks a shift from carbon being a compliance issue to becoming a measurable cost that will influence pricing, margin, and market access. Emissions intensity at plant, process, and product level will increasingly shape competitiveness alongside traditional factors like quality, logistics, trade duties, etc. Now, CBAM also raises a complex range of questions around emissions measurement, data verification, audit readiness, documentation, etc. Now, many non-EU steel producers are now grappling with how to align their internal data systems with EU methodologies, how to engage accredited third-party verifiers, and how to manage uncertainty around default values, penalties, and future enforcement. Equally important are the commercial implications. CBAM has the potential to reshape sourcing strategies for EU buyers, alter contract structures, and accelerate differentiation between low and high carbon steel suppliers. Over time, it may also influence investment decisions, technology choices, and decarbonization pathways across the global steel industry. So today's discussion aims to move beyond theory and regulations and focus on how CBAM will work in practice, what it means for steel producers, exporters, traders, and EU buyers, and how companies can prepare to comply, compete, and remain relevant in a carbon-constrained trading environment. I am Madhumita Mukherjee, Consultant Director, Industry Relations, Bigmint, your moderator for this session. I have an eminent panel of speakers with me. I have with me today Mr. Swarup Banerjee, Vice President Corporate Sustainability, JSW Steel. Mr. Banerjee is part of the Corporate Sustainability team at JSW and responsible for sustainability-related initiatives, product sustainability, standardization, and upcoming trends and implementations such as CBAM, CCTS, etc. He has nearly 3 decades of experience covering consulting, management systems, assessments, and operations across a wide range of sectors in India and globally. Welcome to the webinar, Mr. Banerjee. Present with us is Mr. Anirban Chatterjee, who heads Sustainability Growth and Innovation, CIF South Asia region at Bureau Veritas. Mr. Chatterjee is a digital innovation and ESG strategy, sustainable finance and risk management professional with 17 years of experience in the sustainability field. Mr. Chatterjee is a technology enthusiast and certified specialist on blockchain, AI, ML use, along with ESG qualification in climate adaptation and mitigation, green finance, and related areas. Welcome to the webinar, Mr. Chatterjee. Also joining us today is Mr. Ankur Mishra, Regional Trading Lead, Middle East, India, and Turkey, Kargil. A steel industry professional with nearly 2 decades of experience in both domestic and international markets, Mr. Mishra's career spans the entire steel value chain. He has been with Cargill for over the past 7.5 years, where he specializes in steel trading and risk management solutions. And my last speaker, and definitely not the least, is Mr. Harsh Chaudhary, co-founder and CEO at sentra.world. Mr. Chaudhary brings to the table over 17 years of experience in industrial sustainability. He has experienced a wide array of topics. He is experienced in a wide array of topics, including GHG accounting, decarbonization strategies, industrial energy efficiency, climate policy, CBAM, renewable energy, and carbon credits. He has supported 100 plus organizations in 30 plus countries transition to a sustainable future. So it is a very eminent panel that we have here, and to set the ball rolling, Harsh will make a presentation where he will dwell at length on aspects like calculations, emissions factors, carbon tax implications and compliance issues, and reporting requirements. But before Harsh takes over, I want to inform our viewers that they can send in their questions. Now over to Harsh.
Thank you, Madhumita. Good evening to everybody who's joined the webinar. A warm welcome to all the participants, and thank you to Swaroop, Anirban, Ankur for making time for this very, very interesting topic. What I'm going to do is, over the next 15 minutes, I'm going to take our audiences through the basics of CBAM, right? We'll keep it. Uh, I won't go into a lot of detail, but I'll provide a good overview, and then we can have specific questions, right, as needed. So CBAM. So CBAM is part of a much larger program called Fit for 55, which was started in EU, and Fit for 55 essentially says that you need to reduce your greenhouse gas emissions in Europe by 55% by 2030. And there were numerous parts of this program. There was stuff around renewable energy. There were things around forests, etc. And you see it in the top right corner, carbon border adjustment mechanism, which is hitting us now. So it's part of a larger EU program. A little bit about CBAM, right? Why CBAM? See, for the last 15, 20 years, Europe has already implemented something called the EU ETS, or the EU Emissions Trading Scheme, under which all major manufacturers in Europe are required to meet certain CO2 emission standard. If they don't, then they pay a price. Very similar to what we are now implementing in India as called the CCTS. Now, what this led to was something called carbon leakage, where European producers, what they said was, hey, you know what? I'm going to just outsource some of my manufacturing outside Europe because there are no carbon taxes or anything like that. So that takes away a lot of bulk. And obviously, this came to light, and they said, we have to prevent this carbon leakage from happening. That's how the whole concept of CBAM came around. It has been in discussion for several years now. It's not new. It's been in discussion for many years. And to put it very simply, CBAM is a system that puts a price for embedded carbon emissions for production of certain goods which are imported into the EU. Okay, so any goods which are imported into the EU, they come under this this CBAM. How does this work? So let's say that you have an EU importer, a European importer, part of EU. Uh, Supposing they are importing from a non-EU producer, CBAM applies. If they're importing or purchasing from a EU-based producer, CBAM doesn't apply. To them, there are other systems like the EU ETS. What is the obligation of the non-EU producer? For example, also called the operators of installations, an exporter. They need to calculate their CO2 emissions. They need to get their emissions audited, and they need to submit their data. They can submit their data directly to their customers, or they can report on something called the O3CI portal. The EU importers, on the other hand, need to get CBAM authorization, which is due now. Within the next few weeks, they need European importers need to apply to EU and say that I want to be an importer and give me CBAM authorization. Next year, once all the CO2 emissions calculations are done, they will have to buy and submit CO2 certificates of CBAM. And there are various other documentations which need to be done. We'll go into details around that. And in addition to this importer, exporter, there are other parties also involved in the world of CBAM. There is an auditor. These are folks who are authorized by CBAM, accredited by CBAM, to ensure that the emissions being reported by an exporter are correct and transparent. There is EU Customs who's going to check CBAM certificates. So every time something has to be imported into EU, the importer needs to submit CBAM certificates, and we'll talk a little bit on how that works. And finally, there are national competent authorities. These are, for example, the Danish energy body, energy agency. So every country will have these national competent authorities, every country in EU, who will be responsible for buying and selling CBAM certificates. So to put it very simply, uh, if somebody is importing goods into the EU and those goods cross a certain CO2 emissions threshold level, they will have to pay a carbon tax on it. That carbon tax comes in the form of CBAM certificates, right? To put it very simply. Now, who's going to absorb this cost, whether it's the customer or whether it's the importer, whether it's the exporter, it's yet to be decided. It's likely going to be shared across. Let's talk a little bit about timelines. So CBAM is divided into two phases, transition phase and the definitive phase. The transition phase went from October 2023 when it was launched up until December 2024. And we are now just at the beginning of the definitive phase. Just last month, in fact, around the 16th and 17th of December 2024, 2025 rather, is when CBAM actually launched its final calculation methodology and things like that. In January 2026 is when the definitive period starts and the counter starts for the carbon taxes. By late 2026 is when we will understand the list of auditors, and Anirban will tell us more about it. By early next year is when the CBAM certificates will become available on the EU platform to buy and sell. By 30th September 2027, this is a very, very important date, and I would urge everybody to make note of this. This is when your final audited statements need to be submitted, not from you to your importer, but from the importer to the CBAM authorities. So well before that, you will need to submit it to the to your respective customers and importers if you're an exporter. And this is the same timeline by which all the importers are meant to submit the CBAM certificates as well. So we can imagine, and this is all for the trades, all the data which is happening in 2026. So 2027 is going to be a very, very busy year because it is the first time that CBAM is going to have its compliance implications, and there'll be a lot to discover then. And 2028 onwards, there's a steady and gradual increase in the scope of CBAM. They're going to, in 2028, they're covering downstream sectors. 2030, all the industrial sectors get covered. And in 2034, they will remove all the free allowances. I'll talk to you about free allowances in a minute or two. But that's the rough timeline. Let's talk about coverage of CBAM. CBAM covers six sectors: steel, cement, aluminum, fertilizer, electricity, and hydrogen. These they have broken them down into CN codes. So HS codes are typically six digits, CN codes are 8 digits. The steel sector obviously has the most, close to 600 plus CN codes, which fall under that, out of the total 749. And the list of, in case you want to check whether your products are covered here, you can go to the link provided here. We have a free eligibility checker on our website. You can check that out. And particularly just do a deep dive on ferroalloys. Only three kind of ferroalloys are included: ferromanganese, ferrochromium, and ferronickel. A lot of people ask the question around silicomanganese. No, that's not included as of now. Let's talk about calculations, right? So it's a slightly complex slide, but let me walk you through it, and we'll spend a couple of minutes on this because this is very, very important. We also have a website link over here in case you want to get a quick view of what your taxes may be. Now, your total CBAM cost is a factor of three things: the emissions subject to CBAM, how much is your applicable emissions level, amount of goods that you have exported in tons, and the price of CBAM certificates as euros per ton of CO2. Emission subject to CBAM is a combination of three things, is a function of three things. One are the embedded emissions. These are the emissions which are associated with the product that you are actually exporting to EU. And here there is a little bit of a twist. For those who may not know, CBAM is supposed to be calculated on all your total emissions, your direct emissions and indirect emissions, which are also called, which are pretty much electricity emissions. But the taxes are applicable only on the direct emissions, excluding electricity. Now, there are various theories on why it is not included, etc. We won't dive into that for now. We'll keep that for another day. Then the next factor is called SEFA, or Specific Embedded Free Allocation. So this is essentially a factor which allows the EU to play around with how much of your emissions are meant to get taxed. So in the beginning, the free allowances are a lot, and over time they shrink to zero. And the factor which controls it is something called the CBAM factor. So it starts off at it was 100% in 2025, so there were no taxes. This year it's 97.5, and up until 2034 it will become zero, which means that the full range of taxes will be applicable. The one of the other important factors over here is the benchmark emission. So what they've done is that for every CN code or every process, CBAM has created a benchmark value which says that up to so much of emissions is allowable. Beyond that, you will be taxed. And obviously that gets multiplied by the CBAM factor. And all of these calculations, it's not as easy as we've put it out very simply for the purposes of explanation, but it's actually very complex because you need to go step by step across the entire process. So you'll have to start with the sinter plant. If you're in the blast furnace route, start with the sinter plant, then you go to the blast furnace, then the basic oxygen furnace, then you will get into the caster and all the steps. So this will have to be calculated at each step. And that's why there's a specific mass calculation factor over here. It needs to be added to the next step, and this has to be repeated all over. There's also an interesting factor called CSCF, which is the cross-sectional correlation factor. This is a means by which EU wants to ensure competitiveness of its own of the EU-based manufacturers. We will talk about more about that at a later time, but the factor right now is assumed to be one. There's also an option over here to reduce your taxes or offset your taxes if you're already paying taxes in India, for example, under CCTS. So a lot of details of that are still being hashed out, but you should be able to reduce your tax. If you're already paying some tax in India on the same products, you should be able to offset it from the taxes. But taxes in India are only going to be maybe 10 or 15% of the total, right? So it's going to be a small amount, but it will be there. And finally, the price of the CBAM certificate. This is related to the EU ETS price of carbon, which is a fairly known number now. It's a published number. Moving on, direct emissions and indirect emissions. So many of us may be familiar with the old system, not the old system, but the prevailing system of scope 1, 2, 3, defined by the GHG protocol. So scope 1 refers to all the emissions which are happening on site. Scope 2 relates mostly to electricity. Broadly, it looks at purchased energy, but let's limit it to electricity for the time being. And scope 3 is related to all the supply chain related emissions which may happen. So scope 1 is counted as direct emissions. Scope 2 is counted as indirect emissions. And as I said, this doesn't get taxed, but it still has to be reported. And scope 3, in a way, it's half direct, half indirect, depending on what type of goods and services there are. And scope 3, the downstream part of scope 3, which is the consumption, the transportation upstream and downstream, all of that is actually excluded. Right? So many inclusions and exclusions. This is all dictated in close to, I think, about 5,000 pages of regulation, which are an interesting read. Then there's something called boundary settings, and I'm going into a little bit of detail over here, but this is important, right? So there is a CBAM also requires you to draw boundaries and see what is included and what is not. For example, mining is excluded, but some of the other processes which are mentioned over here, they are actually included. So as the right side says, sinter pellet and pellet plant are included except the mining part of it. Uh, all the fuels that you see over here, they're all included. So again, there's a lot of detail over here, but there is a you'll have to think about what are inclusions and exclusions. I talked a little bit about benchmark values. So CBAM, about close to a month ago, they published all the values, and you will see, it's divided by CN code. It also has two columns. One is BMG star and BMG. Uh, all these vary so BMG essentially refers uh, to the benchmark values when goods are manufactured on your own and you have the CO2 emissions calculation, you use these. In case you have imported goods and you don't know how it's calculated and you don't have data from your supplier, you will use BMG, the right hand side column. More details over here which will follow. And also CBAM also makes distinctions between, for the goods where you're importing, you also need to know whether which route it is coming from so you can apply the right factors. Similarly, in case you don't know what the emissions are, you will have to apply a default factor. Supposing you're buying, let's take the example of ferromanganese. The CO2 emissions over here are benchmark is 1.361. So one is for 2026 and the other one, the lower one is for the later year. So 1.361 is the benchmark value for ferromanganese. But the default value is 5.59, which means that if you don't calculate and report your emissions value, you will have to assume this very high factor of 5.59. So it's very clear that CBAM is trying to encourage people to report their actual values. If you talk about carbon tax implications, we talked to you about the price of carbon. So this is just, all the prices are available, on Google. You can look at it, the EU ETS prices. It's, when I started off my career in, mid 2000s, the price of these certificates was 5 euros, and then it fell down to, during the financial crisis, it fell down to like 50.5, and then now it's gone back up. It's now somewhere in the range of 80 to 90. It's been hovering at that level. I think this year it will stay probably in the 90s range. We'll see how that goes, but definitely this is something which is going to influence the answer. This is a quick view of the CBAM tax calculation, but I must warn the group over here that we've oversimplified it just for the purposes of presentation. But if I take, an average ferromanganese product, let's say exporting 5,000 tons, your direct emissions are two tons of CO2 per ton of ferromanganese. And typically in ferroalloys, it's 50-50. 50% is direct, 50% is indirect. So I've just assumed a certain factor which is representative. Your benchmark is 1.361. You will be attracting a tax of somewhere in the range of 59 euros per ton to 112 in 2030, and by 2034 almost 174 euros. 174 euros will come to maybe about 14,000 rupees. If you're selling your ferroalloys for 1 lakh, 1.5 lakhs, so you can do the math somewhere in the range of 8 to 10%. For steel, these numbers are even higher. So, and Swaroop will probably be able to tell us more during the Q&A. But the taxes are significant. From a compliance reporting standard, see, there are the CPAMS has circulated calculation templates which have been doing the rounds for the better part of 3 years now. Some changes to the calculation template keep happening. You have to just be aware on what is the latest version. Typically, you need to submit the summary communications to your customers in Europe. Sometimes it is optional to submit your annexure form, but it is truly optional. Some people do it, some people don't. But summary communication is essential. Earlier, it was meant to be per quarter. Now, this year onwards, it's meant to be per year. But a lot of our customers are now saying that we don't want to do this per year because we don't want a surprise at the end of the year. We will still continue to do it per quarter so that our customers are actually aware. There is now also an option to submit all your data on the O3CI portal. This is still optional. The EU has gone to and fro about it being mandatory. But we would anticipate that in the next few years, this would become everything would go digital and all this data would go into the portal as well. So you can still start using it to familiarize yourself with it. But before all of this submission, obviously the auditors, such as Bureau Veritas, will have to come in and do the right checks and balances on it. I'll just spend 2 more minutes. How to be competitive in the CBAM era. See, we are entering a new world order. We are entering a world which is, for the first time, indexed on carbon, indexed on CO2. EU CBAM has gone ahead and implemented the EU CBAM. As you can say, it is being contested by many, and it will be contested. Every new agreement will be contested. But this is here to stay, and many other countries are also trying to come up with their own CBAM, saying that, if our exports are getting taxed, then I'm going to tax my imports as well. So we can imagine that over the next few years, every country will implement some sort of a carbon taxation system domestically as well as in imports. And just showing one example, we had done some analysis for a customer of ours where we had said that if your CO2 intensity is 1 ton of CO2 per ton of steel, how much avoided CO2 tax can you actually have? And on the right, you can see some of these numbers. We simulated this for different countries. The whole point of this exercise was that, this is the time where, as a steel producer, or as a cement producer, or anybody who's in one of the CBAM tax categories, it is very important to step back and see how your CO2 taxes are going to impact your pricing, how you fall under different regimes in different countries, and figure out what your export strategy needs to be. Because no longer can you just let it be that, okay, my compliance guys are going to do with it, do something, but it is up to now to people responsible for people responsible for marketing, people responsible for sales, to actually come look at CO, not just look at CO2, but really understand how this is going to work. Okay. With that, I'm going to stop my presentation and I'll hand over back to Madhumita.
Thank you, Harsh, for the very in-depth presentation. Now we have a whole lot of questions pouring in from our attendees, viewers. And I want to do justice to all those questions. But apart from that, we have a surprise for our viewers as well. And Simran, can we have the first audience poll? Now, for the first time in our webinar series, we are beginning with this poll, audience poll, and we want our viewers to be. We have a question here. We will give you three questions, and we will give you 30 seconds to answer, and click on the one that you think is right. And at the end of the session, we will take a relook at your answers, at the trend that has come up. So come on, just pick on the answer that you feel is right, and let's close the poll in 30 seconds. This is the first of the questions, mind you. Great. So let's go straight into the Q&A, and we would like to keep the answers a bit brief because we have many questions and I want to take up almost all, if I get the time. But first, my question to Mr. Banerjee. What shifting trends can be expected in international steel markets in 2026 under CBAM? What impact will it have on exports? Can we see a reduction in exports? Mr. Banerjee?
Yeah, hi. Good afternoon, everyone. Thank you, Madhumita, Harsh, and Bigment, and Centra for creating this platform of knowledge sharing where we kind of understand what's happening and try to clear all our doubts, if not all, some of our doubts. So, as Harsh mentioned, the global steel trade is undergoing a structural alignment with the European Union's CBAM that has entered into its definitive phase or the financial phase. And this transition is changing the entire competitive landscape by making carbon as one of the primary cost factor alongside quality, delivery, production, and logistics. Um, Exports to the EU for a carbon intensive region like India or China would definitely be impacted as the mechanism eliminates the price advantage of traditional production methods. What has happened is in the recent past, the released documents have caused significant concerns and confusion and anxiety in the market regarding the use of default values. And I'm sure my fellow panelist Ankur would align to that, because the way European importers uh, are concerned is that the taxes potentially would be very high if the default emissions are to be used. Uh, but that said, most, if not all, the Indian mills are confident in their ability to submit verified emissions data to the European Union. But convincing the European Union buyers at this moment is becoming a challenge. Um, how the markets will shift in 26, whether we see the exports to get reduced, we'll have to wait and watch, because the regulations are evolving. How this would be impacted, uh, the importers are coming with a cautious approach. Manufacturers the manufacturers are also trying to put in their best to ensure that at least they have their verified emissions available, because currently what we see is more than the emissions profile, it is the verification process and the data integrity behind the verification becomes critical, because if that is not applied, if there is the slightest doubt in the process of verification, the EU has the power to just use a default value, which is very high.
Right. Uh, while on this topic, Mr. Mishra, do you think there could be a shift away from the EU markets? Quickly, if you can come in.
Thank you, Madhumita, Harsh, and Sarup and the team for organizing this platform and having me here, and all the audience who have taken out time today. Okay, so I think to answer your question, definitely I think there is going to be shift, not in the first year, because in the first year, I think the emissions which have been verified by the mills, they still allow the commercially exposed to be viable into Europe. So I think the first year and even in the next year, the cost penalty I would say is not as prohibitive as it can get when we reach to 2030 period. So I think in the first 2 years it won't be a big shift, but I think going forward, the traditional blast furnace based flows will be the most impacted, and it can be replaced by European producers increasing production, as well as there are alternate regions like Turkey, Middle East, where the per ton emission is
Right. Yeah. So now let me come to Mr. Chatterjee. Um, what are the requirements for auditors to become accredited? I mean, which body provides this accreditation and why? I mean, when is this expected? If you could fill up the
Yeah.
gaps for
Thank
us.
you. Thank you, Madhuvita. And thanks, Harsh, Swaroop, and Ankur, for having us here for this insightful discussion. Yes, as Swaroop mentioned, that going forward, verification will really play an important role in determining the price applicable for the products. The auditor accreditations are becoming a key requirement. Last month, around same time, 17th of December, they have come out with European Commission has come out with the verification requirements. Only the legal accreditation by the national accreditation bodies, the EU delegated rules, which are basically the set conditions for granting the accreditation for verification, oversight, withdrawal, and some of the mutual recognition. These are under kind of evolving at this point of time. At the same time, if you see currently, the accreditation must be granted by any national body who is approved by the European Commission delegated rules. So all the accreditation bodies within European nations, be it COFRAC, Accredia, SWEDEC, not UCAS, because UCAS is not part of the Europe anymore. It's part of UK. So all the national accreditation bodies can grant the accreditation, and they should also look at the technical competence, the sectoral experience, and also to some extent, as audit comes with independence and impartiality safeguards. So those areas need to be, well adhered. So from our perspective, Bureau Veritas is a French multinational and verification agency. So we will be accredited by the European verifiers. for all the third-party verification. Currently, our process is going ahead with accreditation because we have also the existing EU ETS accreditation for that. So this will be a separate verification in line with ISO 14065 as a standard. And as I said about the mutual recognition, there are various mutual recognition arrangement between global accreditation agencies. For example, our national accreditation agency, NABCB, is also having the collaboration with European accreditation body. So once European Commission also accepts the MLA accredited agency, so our NABCB accreditation may also well be valid for providing accredited verification. Only thing, it cannot be an unaccredited verification. It has to be an accredited verification going forward. So while the accreditation rules are in set at this point of time, basically but the CBAM is already live, right? It's not anymore the default values, as you said. We have to start doing the verification. We can do the pre-verification basically without an accreditation, while the accredited body can prepare for the accreditation over next 1 or 2 quarters. Yeah.
Right. Harsh, let me now come to Harsh. And this is with regard to the calculations before, and then I go over to some of the audience queries. Harsh, how should manufacturers go about their CO2 emissions calculations? And how often should they do this? And how should they report this to the EU importers, if you can explain?
Yeah, yeah. Thanks, Madhumita. See, the calculations are complex, and they're not complex just for no reason because it is a complex topic. I think the EU has spent many years of many PhDs to do this, and it, as I was saying, right, it there's probably about 5,000 plus pages of text behind these calculations. So it is complex. Either you should develop good expertise in your own companies to do these calculations, or work with companies like us to help you in this regard. There is if you're not able to do the calculations properly, there may be a penalty later on, but more importantly, you might lose faith of your customers because they are the ones who are paying taxes for you. So you want to be 100% sure, and you want to be able to defend these values as well because there is a price component over here. So how to do these calculations? Either you spend a lot of time, get your team up to date with it, and really dedicate one very accomplished person to do this, or you ask an agency like us to do that. That's number one. Number two is how frequently should you do it? EU requires that you do the calculations once in a year to submit it, but that's the official statement, right? You do it once a year. However, if there is something that you're paying a tax on, I would be doing that minimum once a month. Because one, you need to know if supposing you're selling whatever you're selling, right? To understand the cost of that product before you sell it, you need to know how much of carbon tax or each component, what it costs. And carbon is a significant part of that. It's going to form 10-20% of your entire product cost. So why not have a good idea of how much it costs? So you should do it very frequently, at least once a month, if not that, once a quarter at least. The forms of submission, see, right now, let's divide it into two parts. What do you need to do in 2026 and what do you need to do in 2027? As my dear friend Anirban stated, that next year onwards is when you will have to get the official audit done. But this year itself, a lot of your customers will be asking you that please submit to me your CBAM numbers because they also need to calculate and see how much of carbon tax they will incur. They can't just push everything to the next year. And for most of them, they're requesting for it quarter by quarter because the carbon tax for 2026 is also going to be applied to the quarterly price of carbon for that time. So you can expect that you should keep your carbon tax calculations ready, as the Excel says in the summary communications template. In case you get requests to submit it on the O3CI portal, you can do that as well. But I would also urge the exporters that at least log into the O3CI portal to just understand what it takes. You don't want to be in a tough situation that you have some export order which is waiting at the port and they're asking for O3CI. You want to avoid such situations. So just be prepared for it.
Right. Now, let's go over to the second poll question. Simran, can you flash it on the screen, please? How prepared is your organization for CBAM compliance starting January 2026? 30 seconds to hit the button that you think is right according to you. Now, I want to take up a few questions from our audience. Now, there is one lady, Madhvi Agarwal, is asking how can an Indian verifier apply for accreditation as a verifier with you for CBAM purposes? Is there any application form or link? Would anyone like to take up this question?
Yeah, I'll answer. So yes, Indian verifiers, like of course you need to have the European legal entity at this point of time to get accredited. Um, but only thing, as I said, the mutual recognition within the accreditation system is mentioned in the verification system. European Commission has yet to give the clarification whether the other non-EU accreditation providers are eligible to accredit local verifiers. It's not yet confirmed. If yes, then it will be open up for a large number of verifiers. Otherwise, at this point of time, it would be limited to some of the European verifiers.
Okay. Now I want Simran, my colleague, to release the results of the poll that we have done so far. It's not complete. We have another one coming up. But Simran, just share whatever you have. So, how prepared is the organization for CBAM compliance starting January 2026? Fully prepared, 33%, partially prepared, 31%, aware but not starting yet, 27%, just learning about CBAM today, a minor 9%. Great. So we'll come back again. Now I have some more questions from the audience. Now one gentleman wants to know, he's asking about the threshold value. He's asking about the threshold value. He's asking about the final threshold values prescribed, the benchmark values prescribed. Are they provisional or final? Who wants to take up this question? Harsh, would you?
Yeah, sure, I can. And I think there are two questions. One is from Mr. Sawant. He's asking, what is the threshold value? So, Sawantji, the threshold value is the benchmark value that we are talking about. Basically, it is to put it very simply, how much of emissions are you allowed to do before you get taxed, right? And that also reduces over time. So that is the threshold value or benchmark value that we are talking about. Maheshji, yes, the threshold values are final. These were published exactly about a month ago, 16th, 17th of December. These are the final values. These have been published. There are two documents: the benchmark values and the default values. Both of them are used in the calculation. So they are not provisional; they are final now.
Right. Now we have a gentleman called Philip Maciel. He's asking if mining is excluded, are methane emissions from coal mining to be considered or not? Who
I'll
wants to
take
take
this up.
it?
I'll take this up.
Mr. Banerjee, right.
Yeah. So currently for steel sector, it is the pure CO2. It's not CO2 equivalent. So currently methane, the entire coking coal process is excluded out of CBAM boundary.
Right. Mr. Banerjee, your volume is a little low. If you could, increase it a bit, it would really help all of us. Now, is Metcook included in CBAM? Who
No.
wants to take this up? Mr. Banerjee?
Simple answer, no.
No. So coal
then
as a process is excluded from the CBAM boundary. While the embedded emissions of coal, when you're adding it into the blast furnace, that is accounted for, but the process of coking coal manufacturing is currently excluded from the CBAM boundary.
now one gentleman, Mr. Mahesh Agarwal, is again asking ferromanganese benchmark
Direct
values,
emissions. Mahesh answers direct emissions.
direct emissions. Great. And Siddharth Sarkar, in case a shipment is reaching EU in 2026, do we need to provide a single value for the specific goods based on CY25?
No, you'll have to do it for CY26.
So whatever
So
goods that reaches on 1st of January onwards would be considered from 1st of January 2026 only, even it was shipped in October, November, December.
yeah. And Swaroop brings an interesting point that there is a delineation between when you are reporting to versus when it may have been produced. I mean, something may have been produced 1 year back, but I mean, you can't set up that kind of traceability to trace it back. So basically, they've kept it simple. So there is,
I would like to add, it is called carbon border. When the product is reaching the border, that time is being, kind of calculated. And from a verification point of view, yes, the default values which is there, and against the benchmark values which you need to achieve, like, and you need to have it within that limit. If you cross the benchmark value, then you will be taxed. So from that point of view, so far in the transition period, the entire reporting which has been done based on which the default values are aggregated already. And then now it's actually the real-time verification which comes into the effect.
Now, I have a question for Mr. Mishra. If carbon costs cannot be fully passed on, how long can Indian exporters realistically absorb CBAM before EU volumes become uneconomical? Mr. Mishra?
So, yeah, can you hear me?
Yeah.
Yeah. So I think right now, based on the cost profile of the Indian mills, I mean, I'm talking specifically on in the Indian context. I think there is still I would say based on what prices are trading in Europe right now versus where the marginal cost of production is in India. I think there is decent enough buffer for mills to partly offset these kind of costs. And I think because most of the bulk of the production which is going to Europe is blast furnace based, so we are using 1.37 as a benchmark, whereas the emissions are around 2.1 tons. So current CBAM cost for Indian mills is roughly between 65 to 90, depending on the installation. So these costs are already kind of factored in the flow which is going to Europe currently, and which is going to be custom cleared in this quarter. The only challenge is the provision, because in case of India, the default values are very high, and the cost from 65 to 70, if you are using the misdeclared emission, it can go as high as up to 250 to 300 euros a ton if you're using the default values. So I think the first year we have to also provision for this cost, which is making it a little bit more complicated. But I think from the second year onwards, everyone will be set up to use the actual mills declared value only. And I think right now, based on the European prices where the cost of production, there is a provision, I think up to 150 euros can be absorbed. But I'm sure mills will not operate at the cost of production. I think they have to operate at the market prices. So based on the pricing between the Asia and Europe, I think they can absorb maybe 30 euros more before they're really looking to divert the flows to Asian markets rather than still focusing on Europe.
Excellent. Then I'm back to Anirvan. Now, how does an ISO 14064 CCCF audit differ from a
Corporate
C?
carbon footprinting. Yeah.
How
So
does
yeah,
this
yeah,
particular
thank
audit differ from a CBAM audit?
Yeah, so as Harsh also showed during the scope and boundary of the ISO 14064 is an organization level inventory development standard, right? And reporting standard. It focuses on basically organizations, GHG inventory, and the associated reporting systems for scope one, two, three, or rather, direct energy, indirect, and other indirect emission. Whereas CBAM reporting requires the embedded emission per product or per installation, right? Or the exporters against the specific CBAM rules and the templates, right? So these are two fundamental difference in terms of the boundary, which is, and then it has a lot of precursor like the example of Coke, what we have seen, the only CO2, not the CO2 equivalent gases underreported. So we have to always see that how these values are verification for only for this embedded emission, checking of the actual values and the calculation method, because allocation, apportioning at the product level is very much needed. Whereas ISO 14064, it talks about the organization level, kind of carbon footprint. And that's why there are more evidence needed for energy invoices, some of the meter reading, some of the production logs, bill of material, some supplier declaration. I think one question is also there. We are not able to get the supplier information. How do we do it?
I
So
was going
there,
to take up that question just now, actually. You can
yeah.
answer if you want.
Yeah. So we have to look at, some of the supplier declaration, like your importers are asking data from the exporters, non-EU producers. Similarly, from the tier one or tier two supply chain also, if it is, applicable as an input material for that particular product. Please understand, the entire purchase goods and services is not applicable to take into the account of the entire embedded emission, only the input material which is going to make the particular finished products. For those, the information you require to collect.
Right. Then we have a question from Mr. Sanat Das. Is related to electrical energy. He's asking whether captive thermal power plant power will only be entitled for CBAM or any other source also, like if one draws from open access. Who will take this up? Harsh, do you want to take this up?
Sure, sure. So see, in CBAM, electricity-related emissions are not included. So if you're drawing from the grid, that is a clear exclusion.
And interestingly, someone is asking why is silicomanganese not included within CBAM when ferromanganese and ferrochrome? Harsh?
CBAM has some favorites. I mean, I honestly I don't know maybe my fellow panelists know the right answer. I I I don't
Anybody
know.
else? Anybody else?
Without saying something politically incorrect, I cannot answer this.
Anybody else from the audience? From the panel? Why?
CBAM has identified certain set of goods which fall under the CBAM. The CN code. See, CBAM is driven by product. The product is defined by HSN codes or the CN codes, which is the combined nomenclature. And the ones that are included in the CBAM is replicating the ones which is already identified within the European Union ETS system. So they do not want to create any new codes which is not currently available in EU ETS and included in non-EU countries. So because it is creating a mirror image of the existing EU ETS system through CBAM.
It is also to some extent the export volume of the product. I don't know whether we are, really exporting the silicon manganese in a, high volume. So that's why in the CN code list, not yet, kind of
Right,
applicable.
right. And Mr. Manikandan P is asking, can we calculate the GHG emissions by each product or would it be product family wise?
No,
It
it's
would be,
yeah.
yeah, Saurabh,
Per
please go ahead.
CN code. It's per CN code.
Purchase,
So
purchase code.
that's the right
No, so
right.
I would like to add here, in the each CN code, there will be different grades of product based on the customer requirements and all. So you can combine the grades of the product under one CN code. And I think there was a question previously about the PCF score as per 14067. I think there is a significant difference of ISO 14067 or PC, product carbon footprint. In product carbon footprint, generally we do the cradle to grave, like the entire upstream, or cradle to grave, right? Cradle to gate or cradle to grave. So the entire upstream and downstream operations and its footprint is not included. That's why it is significantly different with respect to the product boundaries and the precursor associated with that.
I'll ask Harsh one question and then
Yeah.
we'll take the last audience poll.
Yeah.
Harsh, if I may ask you, what is the importance of data integrity in CBAM
Right.
reporting? Very briefly.
Yeah. No, it's of utmost importance. Everything around CBAM is around data. Uh, And the journey starts off from how you're recording that data, the base data of consumption, base data of, your energy factors and things. All of that has to be done in a proper way, recorded not on notebooks, etc., in a digital way with a proper audit trail that needs to be maintained. Once the data is there, the calculations, as I said, are quite complex and very, very nuanced. You'll find that there is some little calculation on page number 1023, which might change your answer. So you have to be very careful about how these calculations are done, uh, dealing with all of the data. And you have to set in place a lot of validations that if you crop, because there might be instrumentation errors, human errors. So you need to set in place a lot
I'll
of
ask Mr.
validation.
Mishra one question.
Yes,
Sorry.
Madhumita.
Okay, sorry. I'm so sorry. I misunderstood.
So, Madhumita, just one more point.
I'll ask Mr.
Yeah, Madhumita,
Sure.
just wanted to add one more point that, we get a common question from a lot of people, and I wanted to address this in the group also, that a lot of our customers ask us that my emissions are high, but I need to have lower emissions for CBAM. So can I just run specific heats in my furnace and provide the data for that, right? And I think it was asked in this group, or it's been asked many times before to me. So I wanted to address that question also, that you cannot do that. CBAM is built in such a way so that you have to take emissions data for the entire time period of a year. You cannot limit it to one heat or two heats. Only thing you can do is, if you have multiple production lines in your plant, you can dedicate one or two of them to CBAM related ones, right?
So just I'll step in here, Harsh.
Yeah.
That flexibility is also removed in the new regulation because it is
Or
the
is it?
if you're producing the same CN codes under different production
Very
routes, you
good.
have to take the weighted average of
Yeah,
all entire production route across the complex.
correct. So even now that is also gone now. So basically, if you have to be CBAM compliant, then your whole plant needs to be green. It cannot be that selected lines or anything is like that.
I'll ask Mr. Mishra one question before I ask Simran to flash the last audience poll. Mr. Mishra, uh, how much additional cost per ton do you estimate for Indian origin steel? And which products or grades are most exposed to the EU market? Briefly.
So I think that, as you mentioned, so the cost is different to different origins. So every country has a different default value as well as a different emissions profile for each producer who is selling into Europe. But I think for typically India, it's around 65 to 70 euros currently. Which I use if I'm using the actual declared value. As Harsh mentioned, the data integrity is very, very important. So we are also choosing, because when there is a big gap between the default value and actual value, the whole exposure sit on a facilitator like Cargill, who is bringing the product from this mill to the customer. The whole risk sits on us. So we also have to profile the customer, profile the supplier who can provide the verified emission with full data integrity without any surprises a year follow in 2027 when we actually get the verified emission. So with that, 65 to $70 is what we are using based on the current EU carbon cost, which is around 92 euros a ton. So 65 to 70 euros is the cost. But product wise, I think when I talk about the steel, if you look at the Indian share of the export into going towards Europe, so hot roll and plates, these are the products where the 50% export out of India is directed towards Europe. So dependency is high, but not as high as is towards the downstream product, which is CR and galvanized, where the dependency is almost 95 to 80%. So 80% for coated products, 95% for CRCA. So these product exports are very heavily dependent on Europe. HRC and plates, 50% is also a big share of import, but typically they can easily be diverted to Asian markets. But when it comes to CR and PPGI and GAL product, the challenges are twofold. First of all, in India, if you see the expansion, next 1 to 2 years, you will have more capacity expansion of downstream facilities, which is going to come in. So you'll have more product availability in downstream. And if you switch between Europe to Asia, the cost difference is almost $150 a ton. So it is not easily you can migrate. You can say so for hot roll the gap is only $30. Ship selling into Europe today versus selling to Asia. But as you go downstream, Europe is giving you a huge premium, which you can not easily substitute by diverting these flows to Asian markets. So I would say product-wise, CR and GI is where they have higher dependency and higher cost of switching as well, and then followed by hot rolled and plates.
Right. Interesting. And Simran, can you flash the last poll, audience poll on the screen? What do you see as the biggest CBAM challenge for your organization? Accurate carbon intensity calculations, data availability from suppliers, scope 3, audit and third party verification, and understanding cost, carbon tax impact. Okay, I'll take up another question now from the audience, that is. Will CCTS carbon certificates and CBAM related, can these be traded?
The
So
answer
the
is
question
no.
was
Thing is asking. Who
the,
wants to
the
take up
question
this
was
question?
can the CCTS certificates be traded in CBAM?
The
No, no,
answer
no.
is no,
Yeah.
straightforward. But what will happen? Why CCTS? Because CBAM will allow the domestic carbon market if there is a domestic tax already been in place instead of mitigation. That much of kind of penalty at the same time the
Offset.
emission reduction offset will be allowed. So even if you are more than the benchmark value, but within the domestic carbon market you have as a producer you have already paid that tax. That much of tax you need not to pay to European importers and buy CVM certificate, but both will not be traded in a same platform.
And I think that even that offset mechanism is still, as far as I
Yeah.
recall, it's still under discussion. It hasn't been officially released yet, right?
Yeah.
We have countless more questions, and I have countless more questions from my side, but I think we will have to draw the curtains on this one, this edition. But before I do anything further, I want to ask Simran to flash the final poll results. Okay, question 3. What do you see as the biggest CBAM challenge for your organization? 21% says accurate carbon intensity calculations. Okay.
I think it's a
33%
mix.
say data availability from suppliers. 15% say audit and third party verification, and 31% say understanding cost, carbon tax impact. So, data availability from suppliers and understanding cost, carbon tax impact seem to be two of the biggest challenges. So, if I may throw the question to my panel now, what do you feel about the audience responses?
Madhurada ji, just to, I mean, from because we are as a trader, it's our job to because the risks, as I mentioned, is sitting on us. So I think today, when we look at these challenges, I think the response is quite spread out between multiple options. But I think for me, for Cargill, I think we are looking at the third party verification capacity because I think we do not still have the list of the third party verifiers as of now. And we believe that when because there are I think as per our estimate around 28,000 establishments to be verified. So when actually the verification process will start, I think there will not be enough capacity on the accreditation side to really have a timely verification done. I think that is an important aspect to see as we go forward because that's very important to get the verified emissions in 2027 from the mills.
Yeah.
Right.
So I would like to just compliment what Ankush said.
Sure, sure.
The from a preparation of these verified actual data, like collection of the scope 1, 2 itself, I think many of the installations lack, and then map it to the correct product flows. So there are guidelines available from commissions and the templates. If some of the installations have not done it, I think it's very important to start. Yeah, that's why the transition period was there. 2 years given for people to start prepare for this regime. Now, once we are into the definitive regime, I think the important part would be to engage verification partners early. Third-party providers like Bureau Veritas, we offer these end-to-end support, and we also need technology, as Harsh was mentioning. The calculations are very complex sometimes, so many of the installations might need a very seamless platform to apportion and calculate the entire inventory for their product level CBAM reporting, which can be also linked with the verifiers for their seamless verification, so as to cut the timeline. And then the verification rules are out. Another 1 or 2 quarter is required for the verifiers in Europe to get accredited, and the list will be out hopefully by mid of this year. But till the time, we cannot let the unverified data go to the European border, right? So we need to get the verification done, even if it is unaccredited. Otherwise, they will calculate the default values from effective Jan. So that's why kind of we are offering pre-verification, and which is accepted by European Commission. And important part is to build this supplier traceability to best extent possible, build a practice, a culture for building this supplier data collection, some of the contractual aspects, to secure this upstream emission data and declaration from the suppliers, because some of the audience has asked that how do I get the data? Even if it is not part of your contractual agreement, the supplier will not give the data, right? So these are some of the preparations required to be done very quickly.
Right. Well,
Manufacturing perspective, I would just add that from a manufacturer's perspective, the biggest challenge that we see is getting the suppliers data, because now the suppliers data is also to be verified
Yeah, exactly.
by EU accreditor. It's not that they
Exactly.
gave us a verified from anyone. So there's a
Exactly.
requirement. If you're submitting, getting a supplier's data, it is not useful unless it is accredited by a CBAM
Yeah.
agency. So that's the biggest
Yeah.
challenge that we are seeing in the short term. And as Ankur had mentioned, that first 2 years are still manageable. The challenge of CBAM comes in when we reach 2030, when the benchmark, which Ankur mentioned, of 1.37 becomes 50%. So your
Mm.
benchmark would be 0.67 or zero point 0.7. So that's the biggest challenge, and we see long term into the CBAM journey if we have to keep India's competitiveness of export to Europe.
And just adding my not even 2 cents on to what Swaroop said. Absolutely, I love that everybody's brought up the whole issue of scope 3, which is going to be something which is going to be very complex. I think just to meet that objective on our sentra.world platform, we've created a special tool by which you can invite your suppliers to get them to easily report, and obviously that will invite auditors like Bureau Veritas to come and verify. But through the platform, you can invite your suppliers to join, and because we have so many companies on the Centra World platform doing their CBAM reporting with consent from both sides, the data can easily transfer. So you don't need to now share Excel files from here to there. Once you give permission, it happens automatically on the platform. So I would just say that, urge anybody who's part of the CBAM value chain, come onto the platform, experience it. It'll definitely make your life much, much simpler.
that was a good roundup, but it's not enough. We've exactly. We've had a very invigorating discussion, but I still feel that there's still a lot left to be discussed, and that is why I plan to be back with a follow-up webinar next month. And but unfortunately, I have to draw the curtains on this edition now. A warm thank you to Mr. Banerjee of JSW Steel, Mr. Anirban Chatterjee of Bureau
Yeah.
Veritas, Mr. Harsh Chaudhary of sentra.world, and Mr. Ankur Mishra from Cargill for joining in. And the topic that we discussed today was the CBAM impact, how will exporters comply and compete. I think we were able to, you know, thrash out the complexities of the topic. But as I said, ye dil mange more. There's still a lot more that needs to be discussed. And we jointly hosted this webinar. Big Mint jointly hosted it with sentra.world. And again, we have another surprise for the audience. Now we have an audience poll where we would like the audience to, rate us on the webinar experience, the relevance of the topic, and a few other aspects. So Simran, can you flash the final poll on the screen? So on a scale of 1 to 5, how would you rate your overall webinar experience? Second question, how relevant was the topic for your role or industry? Third, was the session engaging throughout? Fourth, how would you rate the webinar duration? I mean, was it too long?
I think next time, Madhumita ji, you may keep a little bit longer time to answer all the maybe
We'll
one and
try,
a half
we'll
hours.
try. So we would like the feedback to come actively to us at Bigmint. We still had some audience queries, but I think we'll keep this for the next edition. And as Harsha said that, in about a month's time, I think the stakeholders would be in a better position to judge the scenario. Okay, so I'm Madhumita Mukherjee, Consultant Director, Industry Relations, bowing out. But we hope to be back very soon. Bye, everybody. And thank
Thank
you
you.
for joining in.
Thank
Thank
you.
you, everyone.
Thank you so
Thank
much.
you.
Have a good evening.
Have a
Bye.
good day. Bye bye.
All of you, thank you. Bye bye.